But you have to discover what it means to be disciplined and say, okay, I don't know what I'm doing. I need to control myself. I need to pace myself and not expect to be able to do this every single day as a neophyte. A neophyte comes in with a great deal of fear of failure. How do you conquer that fear? Do what you're supposed to do one time for the week and stop, and then just observe the rest of the week and see how many times you would have got it wrong after that, but safely on the sidelines without committing anything with your demo account. Oh, you're talking about demo. You need to learn in a controlled environment. You cannot learn this risking real money. You can't. You cannot. I don't give a fuck who tells you. I don't give a fuck how much money they made and they're trying to teach you that. I don't give a fuck. Because as soon as you equate the outcome of an experiment or a laboratory study or case study in price action, it only is favorable if it makes you money. If you're learning like that in the beginning, you are training yourself, you're teaching yourself to worry about the outcome monetarily, when the whole function should be, is the market delivering price exactly as I'm expecting it to do? Because once you place the protective stop loss on, and you have already mapped out where your partials are going to go and where your terminus, where the end result is, the goal of your trade, I don't give a fuck what the outcome is in terms of money. When I'm doing my partials, I don't have it calculated. I'm going to make this much on that first partial. I'm going to take that. I'm not doing all that math. I'm looking at the chart. The chart says this is what the price run's likely to do now. Where's my stop? This is where my stop's going to go. Okay. How much is it in terms of the full range? I'm looking for a minimum of 10 handles. If it can't offer me 10 handles, I don't give a shit about that move. Why? Because I'm teaching you. Not that I can't go in there and find 3 handles. Like every 15 minutes, I can pull out 3 handles. You want to see me do it this year? I will. The point is, I'm teaching you, the person that doesn't have any experience. I'm showing you how to go in, be comfortable, not be scared, not have anxiety about what the hell you're doing or what's going to happen. They're going to stop me out. There's certain segments of the time in intraday price action on the daily range where factors are very favorable for you to go in and manage risk responsibly and have a reasonable expectation that the market will likely do a specific thing. That's why I teach the way I do, because it's algorithmic. These things should manifest themselves in price. And if they don't, it's good for you to be out of it, be stopped out and be done. Go to the next session or don't trade the rest of the day. And some of you already are communicating that you don't even have the discipline to not pull the trigger when I'm calling these moves now, because you're trying to make money and you're doing it wrong. You're absolutely fucking doing it wrong. And at the end of the year, when I'm no longer doing this and you didn't learn what you should have learned, you're going to be back at square one, scared shitless, because you're going to do a couple trades on your own. They won't pan out. And you're going to think, oh, they changed the algorithm. ICT's shit's finally been mainstream. Now it's the new retail. It's not going to be the fucking new retail. I'm teaching you the market. I'm teaching you how the market's book price. It is what it is. It isn't going to fucking change. It's not going to diminish. It's not going to, if anything, it's going to get better. As technology becomes more advanced, the precision elements, the static bullshit that you see in certain times of the day, that's going to go away. It's going to be smoother. I'm excited about the fucking future. I'm not scared that it's going to stop. But I understand how it feels. You found the goose that lays golden eggs and you just don't want it to die. Listen, even when ICT's gone on to greener pastures, this shit's still going to be working. And I'm going to be echoing in your mind every week, every day, and it won't stop. When are you going to stop trading? Your model has to have that. You have to know, when are you going to pull the plug and say, okay, I've lost enough today. And it might be just one trade. That's your threshold. That's it. I'm done. I'm not going to allow myself to go into a period of mental drawdown, which is much more expensive than financial drawdown, because financial drawdown is finite. It's limited to what it is. But when you have a losing trade or a series of losing trades, how many times does that fucker haunt you? I can tell you and think about things that I endured in the 90s that just the mere mention of them or reading that journal causes me to have anxiety because I can relive that moment. That's why journaling is important, because it takes you right back to that moment, right then and there, and you can relive it. It's not like these jokers on the social media. I'm going to tell you a trade I took today. I think I got in over here. Get the fuck out of here. Get out of here. If you took a trade, you're going to show us where the fuck your trade entry was. You're not going to think, I think I was around here. I think I did, I don't know how many contracts. Get the fuck out of here. But you're wasting your time listening to these people. You're listening to these jokers. You need to know when to stop. Stop listening to ICT. You've watched enough videos for today. When are you going to stop your trading? When you make money, are you stopping? No. We can't do that. Shit. We still got the afternoon session. I'm at 5 G's, baby. 5 G's. It's the easiest fucking money I've ever made in my life. I'm going to double it. Oh, I can't wait until 1:30, 2 o'clock. ICT said that the next move happens then. And I'm going all in. Texas fucking Hold'em, ES style. We're going all in. And you get fucked on the turn. River card, your history. See you later. Because you don't have limitations. You don't know when to stop. When's a good thing enough? That's why I presented that series, Ends. If you've listened to me and you've adopted this mindset, you're going to get rich real quick. That is unfortunate, because I want you to first master yourself, and it's going to take you 1.5 years, 2 years really to do that. It ain't this 30 days to replace a bad habit. Fuck that. Let me tell you something. If it was that easy, I would have been a whole lot better sooner. This is something totally different. You have never done anything like this. Ever. Because as much as other people may troll me because I don't do what they want me to do, dance for them the way they want me to dance, to the tune they want to play, fuck them. You do what I do. That's all I'm asking you to do. And it costs you nothing. All you gotta do is put your calls out there live. Where it should go, where it shouldn't go. But you have to know where your limitations are. Stop. You make money? What's enough? What is your rent payment? What is your mortgage payment each month? That's where you should be focusing. If I could just get half of that a month. Listen, folks, nobody's writing a fucking book about this. Nobody's going to do a teaching series like that. I did. And you wonder why this industry's plagued with so many failures. Because your expectations are too high. You want Olympic gold results on every fucking trade. And that's not realistic, folks. And you expect it to be daily. And that's not realistic either. The flavor of the month right now is, I want to make $100,000 a month. That's certainly commendable if you can obtain that. But is it realistic for me as an educator or you as a new student to think that you can walk out here in your first year doing that? I never do that kind of fucking shit. I don't ever promote some unrealistic threshold that you should strive for. 6% a month is going to be hard for you in the beginning. So what happens if you only make 1% a month? Is that failure? Fuck no. Some of you don't know math. Like you lose sight, like you forget rudimentary math. You're all wanting to get these funded accounts. I want to be funded to 150,000. Unless it's 150,000, it's not worth my time. Are you out of your fucking mind? Like if you literally had any equity, you can trade micro and build that up. It's going to take you more time. I'm not going to argue that. It's going to take you more time. But it doesn't matter if you only get a $10,000 funded account. If that's what you get, that's what you get. You can work with that. And don't fall into, I'm $2 million funded. Okay. It's become a measuring contest. Like we're all pulling our dicks out to see who's got the longest one. I'm going to sit over here in my lane and say, none of you motherfuckers are going to be as precise as me. So measure up. I don't need to be on anybody's leaderboard. I don't need to do any of that stuff. So don't get caught up in all that. You're here to learn how to make money. That's it. That is it. There's nothing else to this industry except for that. And have fun doing it. Control risk and have fun doing it. Be passionate about it. But you also have to know where you're going to pull the plug and say, I'm done. I've made enough for today. I fulfilled my objective. You have to have goals. There's people out there who are going to say, don't fucking have goals. Have goals. You have to know what it's likely to reach for. Because here's what's going to happen if you don't. You're going to be impulsive. You're going to chase price. You're going to react to price instead of anticipating price. I can't fucking stand it. I can't fucking stand it. When I see and hear people say, don't have goals or expectations in the marketplace where it's going to go. How the fuck are you going to fucking trade? How are you going to fucking trade? Seriously. You're going to put a trade on and not have an expectation where it's going to go? How the fuck does that even make sense? Don't have goals. You got to know where it's going. What conviction are you placing behind the idea that you're incurring risk on if you don't have a fucking goal? If you don't know where the market's going to go next, reasonably, how could you possibly expect to be profitable? You might as well just flip a fucking quarter. Heads you're buying, tails you're selling, right? Some of you newer folks are like, this guy just lost his fucking mind. No, I'm absolutely passionate about what I'm doing and what I'm teaching, and I see this nonsensical bullshit promoted online. It should be fucking criminal. You should be fucking penalized for shit like that. How else could you possibly measure progress, understanding, and learning if you don't know where the market's going to go next? Why are you pushing that fucking button? Why are you inviting monetary loss, emotional distress, stress, anxiety? You're inviting that on the basis of what? A fucking indicator that said it's overbought? Who says it's fucking overbought? That squiggly ass fucking line only crunched numbers back 14 bars. Who gives a fuck? 14 bars on a weekly range is nothing. When the market's going to reprice higher on a level that's established on a weekly time frame, your overbought and bearish divergences aren't going to mean shit. It's just going to keep repricing, and you're going to get mad. But my indicator. But my teacher said, this indicator said it's going to go down. The divergence is there. Fuck that divergence. It's not there. You're right. It's not there. The algorithm doesn't give a fuck about that indicator. It doesn't even realize it's even there. It's not calculating anything on your indicator bullshit. Your harmonic fucking triangles and bullshit you lay over top your charts. None of that shit matters. None of it. So you have to know when you're going to do a full stop. Pull out all the stops, you're done for the day. You're done listening to ICT. You're done listening to the bullshit. You're done trading. You have to have limitations and thresholds that you're not going to cross. That discipline has to be forged early on and continuously honed in this lifestyle because it's easy to get caught up in the mania. Thinking you know more than you really did. I fell victim to that as a 20-year-old. I thought I had everything fucking figured out. And then the market showed me I knew shit. Fuck all. I knew nothing. And I arm wrestled it. Oh, yeah? You want to blow that account? Well, watch what I do with this fucking account. Oh, yeah, you did great. You just fucking lost that one twice as fast. Beautifully done. Let's see if you can do it again. And I did. Did it deter me? Fuck no. Because if they took it from me, that means that they made that money. And I was going to be on that side. That's the side of the game I was going to be on. So when you lose, do you take that as a personal defeat and you're like, fuck, I'm going to end up quitting this soon? I don't. I'm like, okay, that was a good move on the chessboard, but I still have pieces. I'm taking your shit. That's the way I think. That's the way I think about this. Every move on a chessboard, sometimes you're going to lose a piece. That's just the way it is. But as long as you still have pieces on the chessboard, the game's still on. But many of you don't regard the level of risk. And you think, okay, well, I lost a little bit there. Well, my daily max loss is, I'm only halfway there. I just can't go home with a losing trade. I got to get it back. Let me just go in there and try to do it one more time. I won't use a stop loss this time because I'll be worried about getting stopped out if I put a stop loss. So therefore, let me go in there and just do it without stop loss, and I'll do it with 3 times the leverage I just lost on, because then I only need a small little piece. I don't even have to be much correct in terms of where it's going to go now, because I'm doing 3 times the leverage. And then you shit yourself. Your maximum loss is hit, you lost your funded account, or you blew your account. What are you going to feel like when that happens? That's a hard pill to swallow because it's completely avoidable. As soon as you think that you got to fix it, okay, listen to me. I picked up a rule from Larry Williams as a younger man. It really is so true. When I was coming up as a trader in my 20s, in 1993, when I was going in with a little bit more understanding, but still knowing nothing, I felt that every time when I was right and I was in positions that were making profit, and they were unrealized profits, but they were in positions that were paying me, my increase would be gone, and I was holding them overnight. So I was trying to be a swing trader then. I wasn't day trading initially. So I'd put a trade on, and I'd have to wait in agony all day long while I was working, worrying about every fluctuation of price, and I'm panicking all day long, constant panic. It's going to turn on me. It's going to turn on me. It's going to turn on me. No, I had no idea what I was doing. When I was making money, then I hadn't closed the trade yet. As soon as I grabbed my calculator, and on the road when I was delivering candy and soda machines and stuff, that's what I was doing at the time. I had a little Casio calculator watch. Back then it was a big deal. And I would pull up on the calculator, okay, I got this many contracts, and if it goes here, I'm already showing the early signs of I should be getting out right now. And Larry Williams in 1995 made a course, and you hear me talk about this a lot, but it absolutely is true. He says you get this King Kong feeling, like you got it all figured out and you're gonna make so much more money. You don't stick to your trade goal. Now it's become a long-term position trade. You're gonna hold on to this thing for a year now. Originally, it was just gonna be like a 4-day trade. Now it's a long-term position IRA trade. Okay, you're gonna retire on this one, and you think you're gonna be making so much more money, and you start calculating all this shit. If it goes up 2 more cents, man, wheat's gonna kill it for me. I'm gonna crush it. That's the very moment. That King Kong feeling. That moment. That is the surest sign that you should close your fucking trade and be happy with it. And a lot of that is how I do my targets today. So when I'm in a move, I know what it should do. If it's a perfect centerfold trade, it should do this level. And then what I do now is I cope with this desire to be perfect by saying, if I just get 80% of the move and I do that consistently more times than I lose, I have trained myself to accept that as above average, which it is. But to me, I wrestle with that. In my mind, in my subconscious, I'm constantly trying to manifest perfection. In my entries and my approach to getting into a move, you're going to see that signature is there because I worked very hard to overcome fear, which is what my son Cameron has now. He wants to trade. He wants to do well. He wants to impress dad. But I'm trying to tell him, you don't impress me. You make fucking money. You follow the rules and you make money. You control risk and you make money. That's it. But I was afraid in the beginning of taking trades. I was afraid to get in. I just was scared. I learned how to be a futures trader, I thought. And with no experience, I went into options and lost my fucking ass in the first trade overnight. So impulsiveness, knowing where the stops are, where's the thresholds for you? Are you going to be influenced by greed? Are you going to allow greed to be a factor in your decision-making process? You have to say when you're going to stop. When are you going to say no more? Whether it be profitable, whether it be studying, whether it be taking a loss. You have to place those limitations in, and you have to stick to them. That's forging discipline. If you don't do that, your broker's not going to do it for you. I can't do it for you. Your trading partner in life, they're not going to do it for you. You have to be responsible with that. And how much are you going to risk? This is the part that everybody loses their ass on. They think that, they can take big risks to fix their problems in their drawdown. And then all of a sudden it makes it worse and compounds it. And they blow their account, lose their funded account, and it wrecks them emotionally, psychologically. And that barrier is a long-term loss. That's the part of trading that isn't talked about enough. And I love listening to people who have traded for a long period of time, because when you really listen to them and when they open up to you,
when you're risking, you're putting on risk that has real potential to do damage to you emotionally. So when you listen to people like me or other educators, and they say risk 2% on your trade, 2% is a lot. New traders should not be risking 2%. I think that you can make a lot of money risking 0.5 of 1%. And anybody that says that you can't is full of shit. Now, there are people that can do really phenomenal things risking a lot. Larry Williams was one of them. Okay. I don't think that that's something that a new trader should aspire to do, because number one, you already have a lot of other things to worry with. And if you learn how to trade and you can do things well, reading price action, over time, you'll learn where your strengths are. You'll know the setups that you can really trust that are going to be runners. And that part is a knack. That's an experience thing. Most of the questions that you see many people ask me all the time, how do I know this and how do I know that? As soon as you see a question started with the framework of how do I know, chances are I'm going to 99% of the time say it's just a matter of experience. When I don't know very much about that guy, Tom Hogard. He's apparently he puts on really big size and takes on a lot of risk. One of the videos, the few videos I watched, was one of him showing where he put up, I believe the equivalent like 40,000. I'm probably doing a terrible disjustice to the presentation, but I only watched it, one time, and from what I gathered, he knew going in, and it was very responsible of him to articulate it in his presentation that, he knew going in that he has the potential of blowing out, but he was going to push it really, really hard. So he's a high stakes trader. That's Larry Williams level type risk. That, to me, that's anxiety inducing. I personally could not take that kind of risk on, because the outcome of failing with it would be worse than the monetary loss. So the advantages of using money management to do all the heavy lifting, that's what I do. That's how I teach it. And every time you saw me run up the accounts, that's what I utilized. I wasn't doing crazy leverage, but I have a lot of respect for that type of thing, because if you can do it, man, that's brass. I can't do it. And I have no shame in saying I can't do that. I can't do world poker competition. These same people, you see these same faces that are willing to put big, heavy bets on. They have strong convictions. You're not going to talk them out of it. Unfortunately, and I don't know very much about Tom, but I think he would be in agreement in this regard. I don't think that a new student that has no experience whatsoever should aspire to do something like that. And I think he communicated that effectively in his presentation, saying, this obviously is very, very risky, and he's not promoting the idea that you should try to duplicate that. I can tell you, and I know some of you are probably already hoping this is going to happen. I'm not going to be able to do that type of $40,000 risk and let's try to blow the account up to $400,000 in one day. You're not going to see that. I can't do that. I can't do that. But I can grow an account over a course of a month, 2 months, 3 months, and have really respectful returns. So again, you have to know where your thresholds are. You have to know what you're capable of doing and where your problem areas are going to be. Because if you lose money, the money is replaceable. It's very difficult to patch up a scar that comes from losing badly, especially if you know going in, I should not be doing this, and your conscience is telling you, don't do it. You shouldn't be doing this, but you just gotta scratch that itch. And as soon as you enter that trade, guess what happens? Regret. The loss is easily recouped. It's money. That can be made more of. But now you have that mental scar, that scar tissue that's going to haunt you for as long as you trade. And even if you stop, it's still going to be a source of pain. It's going to limit you. Scar tissue. It's not as flexible as your regular flesh. So when you stretch your bounds beyond what you're used to doing for growth, what are you going to be leaning on? All the good stuff you did right? No, you're not. You're going to be limited by the scar tissue that won't let you stretch as far as you would if you wouldn't have endured that painful thing. So you don't want to develop a lot of scar tissue, which is what I did in the beginning. I have a lot of scars that they're still impacting me as a trader. Like I know certain things that I've done to myself that are going to be detrimental if I repeat them. And sometimes they manifest themselves in my decision making and will either limit or altogether cause me to not participate in a move. And I'm comfortable with missing it because I'm not losing anything, but I'm not making anything either. So because of the scar tissue of doing things incorrectly as a developing student, trading before I should have with real money, and learning, I thought, with real money, when I had no idea what the hell was going on. I had no idea what price was doing, none. And I was in there trading 25 contracts of soybeans. No, I was dumb. I was so dumb. I had no business doing that. So you have to have a real world grounded respect for risk, especially when you first start. And don't be ashamed to say, I'm going to adopt 1/4 or 1/2 of 1% risk, even in your demo. You punching these numbers in and doing 10 contracts and 40 contracts and 16 contracts and being mesmerized, hypnotized, if you will, that this is what's reasonable for you to expect as a trader. That's why when you're trading with a demo, you should only be trading with, even if they give you $100,000, unless you're trading with $100,000 when you start trading with live funds, that's stupid to even consider it. Trade with the smallest size that the exchange will offer, a micro. Trade with that. But it's only $5 ICT. Who cares? You're learning how to read price. You're trying to remove the influence of the profit or loss, because that doesn't limit the effects on you as the trader. The psychological impact of that win and loss monetarily has much more lasting effects than the short-term affliction that you place on yourself with drawdown, or the mania that comes with doing something right and walk around feeling like you're invincible. Because that moment that you think you got it all figured out, you're very vulnerable. You don't realize it, but you're extremely vulnerable. You know that you just had a windfall victory. And you're going to ignore the fact that you over leveraged, you broke rules, but you're going to just say, well, I ain't going to bother with that right now because look what I made. And as soon as you share it on social media, that's it, it's done. You're going to keep going back to that post, see how many more people like your post. hitting that dopamine. And when it starts to wane and wear off, and there's more trading hours in a day, what are you going to do? Are you going to look at that win that you got that was really not justified because you took too much leverage in it? You broke every rule, but you want to feel good. Let me tell you something. You know what feels good? Knowing when not to trade and when to trade and only executing like that and being done. That feels good. That's fucking amazing. That's better than a Saturday night where you made it real, real good. You fill in the blanks when you know what I'm talking about. There's nothing better than being disciplined and knowing what you're doing, why you're doing it. Even if you have a losing trade, it feels good because it can't take more from you. You limited how much flesh it can take off of you. There's only so much ass you can lose in this business before you're done. But you have to fight that desire to feel like, okay, that one was great. It felt amazing. I shared it on public social media. Everybody sees it. And I got to do the next one because I'm feeling my high wear off. What are you trading? Think about that. What are you actually trading? Your social media equity curve. And that's what everybody's trying to do right now. Fuck social media. All of you that are listening, God bless you for giving me the opportunity to talk to you and share my life experience. But ultimately, if none of you give a shit about me, I'm not losing sleep. I'm not changing my lifestyle because you like me or love me. It matters not. I'm pouring myself into people that are willing to listen to me. And hopefully I'm protecting some of you from yourselves before we even start this endeavor this year. But invariably, some of you aren't going to be saved. You want the scar tissue. And once you get it, you regret it. It hinders your growth and slows you down. So I'm teaching you in a way where you have all the upside advantages. And I'm trying to minimize all of the carnage that is possible if you just let yourself run wild. There has to be a controlled, structured approach to doing these things, knowing why you should do it, when you shouldn't do it. And you have to know what those thresholds are. And you have to also place them in a limitation in terms of monetary risk.